We are back and we're going to get into what the ETF for Ethereum means for the market, and how you can take advantage of it. We did have the SEC finally sign off on the approval for the Ethereum ETFs that have been proposed by a bunch of different firms. The majority of people are looking at BlackRock and their iTrust accounts. But there were other firms that also put in for it. And after that approval, I'm just going to talk to the broad spectrum of what ETFs in general mean for the crypto market and how the dynamics are going to change moving forward because there is institutional capital moving into digital assets. So we've seen this with Bitcoin. It's the only other thing that has an ETF here in the US that's been approved. There's ETPs in Europe, but we'll not discuss those. So with the ETF for Bitcoin, we've seen a massive run up to the ETF going live, and then even further run up. And it's changed the market dynamics. So if you look back, people talk about 4-year cycles and a bunch of other things. Constraints have changed if you believe in those circumstances, right? There's a lot of people out there that look at the 4-year cycles for Bitcoin and halving and how, the bull run takes place after that. We had all-time high for Bitcoin almost right at the halving or just after. And that is very unusual. So that's just a constraint, again, that's changed with the ETFs that's allowed more institutional capital to move into this market, along with retail basically doubling down that's going to improve their positions, right? So we reached out to 73,000 with Bitcoin, and then it's trended down a little bit sideways since then. People do anticipate that is going to go exponentially higher as more ETFs across the globe are approved for that asset. And I'm not so sure on that, but irrespective, market dynamics have changed. And really the main component of the ETF model that matters is we now have these large institutions that have huge positions in that digital asset, right? There's a limited supply. They've aggregated a ton of it off the market. It's a spot ETF. But what I would want to mention here and why I think it's important is that those are the people that trade the ETF are not hodlers. Okay. So if you don't know what a hodler is, it's hold on for dear life, HODL instead of hold. They don't care. They're here to make money, right? And when they do exit those positions, normally we see an exit from Bitcoin and there's a rotation to altcoins. That's not going to happen with the ETF. Okay, we've seen some altcoins start to move here, but not anywhere near like we've seen in past cycles. Because again, people that are liquidating the ETF position, the bank is just selling that for cash, or the FI, the financial institution, selling it for cash. It's not the same as past cycles. So I believe that the same thing will be true for the Ethereum ETF. We've seen a large run up in anticipation of its approval. And so the speculation is, obviously now that the ETF's been approved, just like Bitcoin, it'll go on for and even further in this cycle and continue to appreciate in time. But again, the people that are going to be aggregating that position, they're not people that are in the digital asset market. They're the investment banks. So we haven't seen a downturn in the market, and what the implications there are when, people start losing on these positions and start liquidating heavily on the ETFs. We've seen some outflows that were heavy, but not in a down or a bear market for these digital assets. So if we do have a black swan event, if there is some other horrible news that comes out around digital assets, which is inevitable, in my opinion. We still don't have full, clear regulation here in the U.S. We're working on that. Over the past couple of weeks, we've made a lot of headway there, but we're not on, secure ground with this asset class. And so because of that, people that we're advising, we're still not seeing them move into the market in a huge way. They're dipping their toe, right? They're watching the market. They're going to make sure that regulation and all those other things move in, and then that's probably where family offices that we work with will enter the market. The ETFs are a significant constraint that has changed with the market. And I do think, as long as we do see favorable market conditions, you could see significant upside in Ethereum, potentially other projects that are associated with that network, right? So Bitcoin has ordinals and a few other things there, but there's really not a lot built on top of that network. Ethereum has a lot of layer 2s, smart contracts, other things that have been established on top of that network that liquidity that's coming in from the ETFs could then be moved over into, right? So layer 2s on top of Ethereum might be a good time to take a position there if you think we do see further upside in Ethereum. I would just, again, caution, I don't know what happens with stablecoin regulation. Tether is still out there, and it does hold a large position in Bitcoin. It doesn't have any Ethereum, but it would not be compliant under the current regulations here in the U.S. If they did roll that regulation out. And so what are the implications for that? I don't know. I just want to caution people if they are entering this market here. So there you have it. The ETFs have changed market dynamics for crypto. The investment banks are here in a meaningful way. It seems like we're getting traction, regulation, adoption here in the U.S. And if you do think that, they're here to stay and that they're not going to liquidate their positions in a significant downturn in the market, then probably rock on, continue to accumulate. We're still hesitant when advising our clients. Really looking at that $75,000 level for Bitcoin, and making sure that we get beyond that before, we're certain that we're headed higher than that. So not financial advice, but that's what we're looking at. Hopefully this is valuable for you, and we'll see you guys on the next one.